Hello. Just an update on my progress. This challenge was the $200 to $400 challenge. I'm up to about $312. The last couple of days have been flat, but I made this other play. You can see my activity here. I made. See, on the 15th, yesterday, I did a couple trades here. I bought, sold. I ended up losing on this. So I was up to about 340, and then this one trade I lost. And then I made this new play on, and I think I made a couple bucks on here. Let's see, 30. No, actually I lost $3 in that one too. So I ended up losing about 10 to 15 bucks on these two trades. I just sold out before I lost too much. That's what this year I'm playing it safe. So what I did is I did another play today at 11:28 a.m. No, I sold that out. We only have one position on the Russell 2000, and basically what I'm doing is playing options on the Russell 2000 futures, and I'm doing exactly the same thing. I'm buying a cushion, hoping that the Russell 2000 futures doesn't go above 2120. Right now it's 2075 a share, and I don't want it to go below 2005. The price of the futures contract. That's why I don't want it to do. Well, this is kind of confusing. These are options on the futures, and you can actually buy these directly too. If you click on it, it'll show you how much it costs. This one particular futures contract on the Russell 2000, if I were just to buy it, it would cost $7,500 to buy it. But that's why I'm using. That's the reason why I'm using options. Right. See, here's my current play right now. See how much cushion we have. Only issue is this expires in 2 days. This expires on the 18th, which is, I believe, Friday. Yeah. So our beginning of our challenge, I started on February 7th. Right. And now it's 5. This is the 8th trading day, and we're up to about $315. I was hoping to get this above 400 yesterday, but I think I'm going to do another play tomorrow. This play has a potential max profit of $90, and we're at $37 so far of the profit. So, and just based on the cushion here, and if we can actually look at the chart too, if we want. We go to a bigger time frame, more days. Let's do 3 weeks out, and just go look at the what is the bottom here. Here's a good bottom here, like 1970 is probably a good bottom. Yeah, 1900 and 1970. So just thinking out loud, maybe in our next play we would go out a week or so, and look for this 1900 level here. 19 is down, so way down here. Yeah, it's not going to pay anything. You only get $13. Plus the commissions on this is $5. So even if we make this play, we're only going to make let's just say with commissions and fees, it's $6 commissions on this one trade because it's a futures contract. So we're only getting about half of that. We're only going to, if we make this play, we're only going to make about a $6 profit, risking $230. So that's not worth it. So what we can do is go go up a little bit. Go to 19. Let's go to 1950 and see what that pays here. Right there. And let's go one up. So that's 25. That's 25 risking. We can do the math here. $225. That would be 11% on return on the money. Anyways, I'm just doing the math how I usually do it in my head. I usually don't. I automatically know that this is 11% now. This is about 10%, right? 25 or 2, so it's about 10%. So if we look at, if we try to buy it and balance it out, we can buy the other side. So we look at the delta. Let's see if we can sell a 12 delta on this side. This is the 12 delta. So we do 2 plays. All right. This commissions. Look at, we can see how much the commissions are. It doesn't show the fees here. It's weird. But it's going to be like $10 in commission for this play. And right now I can just make this play. I can sell the other play and make this play. And let's see if we can get oh, this one has $600. We can't make it. We need $600 in collateral to make this play. So see, that's the reason why I need to make the account bigger. We're going to total risk 195 to make. So even if we did have the $600 in our collateral for the collateral only, this would be more than 10%. 195. So 28%. So I might make a play similar to this, but on a lower pricing futures, probably even silver or something. We can look at the silver. Go back. You know, we can use so many different chart patterns. We use chart patterns. We use news that's coming out in the news. We use so many different things. But just by looking at this massive drop, we can even use trend lines. We can use trend lines. Let's skip that one right now. Let's do extended line. See, we can see this trend line here. Nah, that's a bad one. We can even do this trend line here. Basically trend lines. So when we see this thing drop below this, you know, that there's certain points where it has a trend. You can do it on the top too. Let's just do a rough draft here. Yeah, so that's that's my thinking process is when I but the reason why I want to do the slash equates to futures. I want to make a play because, like I said, it doesn't require day trade pattern rule where you need 25 grand in your account to trade more than 3 times a week on a margin account. So I'm probably just gonna play. I think this account has 2 day trades left, but I'm just gonna wait. See how oil drop? We go in a quicker time frame. Oil. See how oil drop? So we just do technical analysis here on and the political turmoil that's going on. See, we can see a trend line right here, long-term trend line. Right here. See how this trend line right there? See the bottom points line up exactly, and the oil just dropped below this trend, so it might be on a downturn. Let's do 5 minute. Yeah, it's on the bottom of that trend right there. So we're looking at maybe this is resistance pretty soon. Yeah, we can just wait on. We can wait. See, the waiting game is that we can see if it resists when when the price of oil goes up another 75 cents, and if it stops there, we know that's the resistance point. See, but I'm just thinking out loud. Oh yeah, I made a bad bet on was that Roblox? Roblox. There it is. I made a bet and I got out. I ended up losing like 50 bucks on my other account. But that's the status. We have a Russell 2000 futures play, and we're playing options on that future contract. And here's the options chain. Here's our cushion again. That's all we want to do is just make sure the price of the Russell 2000 futures contract is within this cushion. That's all we have to worry about. And if it does, we'll collect the full $90 in profit. All right, bye.